Let's go live to Evan Lucas now. He's the Chief Market Strategist at InvestSmart. Evan, great to see you. We are awaiting those employment figures today. A little bit more important today than they have been in the past. The RBA watching these figures like a hawk.
They are indeed, Laura, and I think that's probably the way to look at it. The question for you, and this is, we have a really sort of strange little acronym we call it. It's the NARU rate, which is the non-accelerating inflation rate of unemployment. Now, let's just turn around and call it what it really is, which is the terminal rate. So once that rate gets to what they believe is 4.5%, that is when inflation would still hold, but anything past that point would actually start to see inflation materialising. So we are still 70 basis points away from that figure and expected to hold at 5.2% today. That's what and why the RBA now watches employment, as you alluded to, so incredibly closely. It's not something for a long, long time that the RBA ever talked about. Their core mandate is actually inflation, getting core inflation, so that's not including things like food and fuel, etc. in there, core inflation around 2 to 3%. It hasn't been in that level since the third quarter of 2015. So they need wages to rise, to therefore see consumptions rise and bring in core inflation up to their level. So it is core because this is the first time that both cuts that have now happened are factored in. So it's the numbers for June. It will be very interesting to see whether or not unemployment does move. It doesn't look like it will.
So you just sort of touched on that. So how does the RBA and the government as well kind of view those figures?
So the RBA, very as you just alluded to, Peter, it is very much now part of their overall mandate. It always has been. The overall sort of thesis for the RBA is to maintain a strong sort of economy, which includes inflation, employment, overall economic growth, etc. So they've sort of brought that in there. The way they look at it is that the unemployment rate is the best measure for the employment as a whole, but they are looking at other things. If you look at employment growth, and this is where the government part of your question comes in, employment growth in the last sort of 3 years has been astounding. It has been incredibly robust. It's very, very strong. You've seen almost 400,000 jobs created in the last 36 months. It's around about 180 over the last 7 to 10 months. So it's very, very strong. What is happening, and this is where the catch is with our employment, the way we actually probably capture the actual numbers themselves, is that the participation rate is what you need to look at here. And that's where the overall group of participation in Australia sits at 66% of those that are actually deemed to be able to work. And that's between the ages of 16 and 75. So 66% of us are in that market. The catch is that we drop out. And what's been happening as that employment growth has got stronger, those people that haven't actually been captured in the survey are coming back. So it's almost one for one. Right. We've got the highest level of female participation we've ever seen. That's the second highest level of participation on record. So that's why unemployment isn't getting lower, because those people that weren't even in the survey are coming back to the market. This is where the government has a problem. They need to find ways to actually grow the employment market better than what they currently are.
OK, so that's an important point to make, that there's more people out there looking for jobs. So that's why it is affecting the figure. But if it does remain the same, can you kind of strip that point out that you just made? And if it does remain the same and completely immovable, does that raise some red flags about how effective these interest rate cuts have been?
Yes, it does. And I think, Laura, the other way to put that to it is we saw, about a week and a bit ago that Josh Frydenberg and Philip Lowe sitting down saying, you know, we all are agreeing that things are okay in certain parts of the economy, but where they do differ is around policy, not necessarily fiscal policy, but policy, and that's red tape. And that will be the discussion going forward, is how government red tape can make more efficiency and therefore more employment.
Evan Lucas, appreciate your time. We'll see you next week.